Investors have dealt with some of the wildest volatility they've ever seen. In just 25 trading days, the S&P has lost roughly 34% of its entire value. That is the quickest descent in the history of the stock market from a recent high. You see, on average, it takes 11 months for the S&P to lose 30%. At least it did on the last bear market. And in this one, it took 25 days. There's been an unprecedented economic impact from the spread of the virus. The virus is one of the main reasons why the stock market has crashed so much. The pandemic has shut down all businesses throughout most of the country, and it's put an estimated 30 million people out of work. At least it has, based on the initial jobless claims filed over the previous weeks. Despite this, the stock market has clawed its way back. It ended the previous week well off its lows. In fact, the Nasdaq is even higher than where it began in the year. And this has a lot of folks wondering if the market has put itself in a firm bottom. If you ask me, I think that it hasn't. Now, while myself or no one can say whether the S&P will take out its March 23rd lows, I feel pretty confident that we're in a bear market rally and that another stock market crash will come very soon. Let me lay out the reasoning for that. The first thing we have to ask ourselves is, why has the stock market rebounded so much if the economic data is so bad? Well, the first question is, why has it crashed? Most of the country has been on a mandated stay-at-home order from their respective governors, at least outside of non-essential business. Short-term investors, they've been laser focused on the number of new corona cases, which in recent weeks it has leveled off due to the mitigation measures in the US and throughout the world. But second, we've seen the Federal Reserve willing to bend over backwards, do things that they've never done before. The quantitative easing, the injection of just tons of liquidity into the markets. And they did all this to help support the US economy. Now, they not only did they inject tons of liquidity, but they even passed a 2. And they did so in April. But that probably has a lot to do with the stimulus, I think, than anything, right? I mean, they're laid off, they get the stimulus money, and then they've made their rent payments. But what happens when the stimulus money stops coming? That's the million-dollar question. Federal stimulus is providing a false sense of hope. So the federal stimulus package has provided investors and regular consumers a huge shot on the arm with funding that just wasn't expected. So many lenders, They've been making allowances for late payments, but no bank can afford to keep delaying its income forever. So if you combine that with the unemployment rate and the aforementioned temporary nature of the government financial aid, I don't think it's going to be long before mortgages and lending defaults deliver another hit to the stock market. So let's go over the second thing, business activity. I don't think it's going to bounce back quickly once restrictions are lifted. We're not simply going to just flip a switch and have businesses go back to normal. In the US, each state has been handling their reopenings differently. Some have been ramping up activity very quickly, some have been doing it much slowly, some have been quickly easing restrictions, and some not so much. Some even all the way into the summer. The reason I mention this is because there are still currently 33 million people out of work. So that means come May, June, July, the dead heat of summer, August, no jobs. This is actually really concerning because a lot of the restaurants are under this mandated 50% and 25% capacity. So think of all the restaurants that are open at 50% capacity. It just may not be worth it to open up at all, at least relative to the nominal expenditures associated with the takeout orders. I don't think business activity is going to bounce back as quickly as everyone thinks. And then the third thing is, I think a second infection wave is possible and even probable. You see, another concern for the US economy is that a second round is just flat out going to happen. And to be clear, I don't think it's just the US that's at risk of a second wave of infections. And without a vaccine, any country is susceptible to an increase in infections. But the US is unique in that it's outlier of developed countries when it comes to its developed confirmed cases. That makes it very unique in this situation. Whereas nearly all developed countries have seen a steady decline of the 19 infections, the US actually has just now started to turn that corner. So infections are starting to level off, great. New York, great. California, great. But we need to continue to see in addition to leveling off, a continual lowering in the infection rates. And until we see that, I'm not entirely sure that we're going to be on our way to recovering. And then the fourth thing is, I don't think Wall Street can set any bars for quarter two earnings. So they've already lowered their quarter one expectations because the pandemic hit in the third month, basically the last quarter part of the first quarter, which means 2 months of the second quarter was during the pandemic. So they can't really determine any type of earnings per shares. So don't overlook that in Wall Street. Wall Street's played a big role in aiding the economy and in the stock market. Typically, publicly traded businesses provide sales and profit guidance, but not this quarter. Typically, for a company to go up and have this type of rally, they have to surpass earnings per shares and beat expectations. But that's not happening this time around because there are very little earnings per shares and no one is beating expectations. I just think things are going to be very different beyond the first quarter. When you take a look and see that all companies have removed their 2020 guidance, it just leaves Wall Street with little to go on with regard to the second and even the third quarter estimates. You may not realize it, but investors do rely on consistent earning beats to push the stock market higher. As a matter of fact, the stock market is forward-looking. So if they feel as though that you're not making estimated forward-looking higher earnings, the stocks would drop. But they're not dropping this go around. Everything the stock market has been doing the past few months goes in the face of solid investing, period. And I think that the roosters are going to come home to roost, if that's the saying. And lastly, I just don't think the Fed can present a recession, but I don't think they can prevent a recession. Investors need to understand that the Federal Reserve, it can't just prevent a recession as a result of the COVID-19 virus. There's no question that the Fed's unlimited quantitative easing, or what we call QE, it's going to help liquidity, and it's going to help businesses, and it even helps the end consumer. But the fact remains that lowering interest rates to the spur of lending, it does no good when consumers are too afraid to leave their homes to spend money. In addition to that, not only are people afraid to spend money, but businesses themselves haven't ramped up yet. And when you take a look at all of those combining factors, I just can't possibly see how we're going to be able to avoid a second crash. I do think it's going to come, and I do think that it's going to come unexpectedly. We'll wake up one day, We'll look at the news. It'll be a tariff. It'll be a COVID breakout. It'll be aliens invading from Mars. Who knows? But I do think a second wave is going to come. I should say at least from the stock market crash. So there are no guarantees that the stock market's going to go lower. There's no guarantees it's going to go higher. But just based on the fact that we've been in now a over 10-year recession, 10-year bull period, when typically we have a recession every 8 to 8.5 to 9 years, I think that we're well overdue. So what are my goals? What are my actions? My course of action at least. Well, I'm going to continue to watch the stock market on a daily basis. I'm going to continue to buy and ease in and do cost leverage analysis. Basically, as stocks begin to fall 5-10%, I'm just going to just basically purchase some as they continue to fall down. And as I think that the bottom is in or close to being in, then I'm going to go ahead and purchase additional ones. I think that's really the smart thing to do. Outside of that, I'm not really sure what the next goal is, but I do know one thing. As Dave Ramsey has said, he made so much money in the last recession. And if you're smart and if you follow this channel and you follow my advice, you will too. So thank you guys so much for watching the video. If you've gotten to the end, please hit that like and subscribe button. Please make sure you leave the comment below. I'd love to know your opinion on whether or not you guys think we're going to hit a second recession. And also, please keep a lookout for the notification button for additional videos, because I will be posting at least 2 videos per week, if not more. And I hope that this information has been super vital to you guys. So thanks so much for tuning in. Talk to you later.